Thanks for joining us today. We are deep diving into the details of what it looks like to be a self-employed buyer. We've talked about this in the past. The Cliff Notes versions would be the sooner that you get in touch with the lender, the better off you'll be. And that basically goes for any home purchase, but especially for business owners, there might be some things that we would want to put in way in advance to help get cheaper cost of money, to make things flow easier, any number of things. So we're going to cover a lot of ground. We're going to kind of pace this today, get into enough detail where there's a lot of value add, yet not waste anybody's full day. So we're going to cover the highlights that you see on the screen here, but we'll probably spend specific or more detailed time on specific areas. So with that, let's go ahead and bring in our co-host who will be doing the majority of the talking today as we're talking about the lender piece. Let me see. How you doing today, Chase?
I'm good, Jared. How are you, my friend?
I'm very good.
Good.
Yeah, very good. Excited about this topic. I know we've talked about it kind of at the 30,000 foot and a little bit below in the past, but I think the viewers will really appreciate this deep dive to kind of have a better understanding what they're getting into.
Yeah, absolutely. And it's near and dear to my heart, right? Like I've had come from a family of entrepreneurs, small business owners, and so with the guidelines making it more difficult for them. I've made it part of my mission to solve those problems as best I can.
Yeah, we need those advocates for sure. There's in our heart, near and dear. We're both self-employed. You've had family, but also just entrepreneurship. We encourage that all the time.
Yeah.
If you're going to generate wealth through real estate, if you're going to step out into business owner side of things, there's a lot of things that come around that, and we just want everybody to know that we're the advocates to help accomplish your goals and objectives, and kind of talk about the details of what that looks like. So with that, let me do a couple real quick housekeeping items here. For those of you that I haven't met, my name is Jerod Lee. I'm the associate broker and team lead here at My Home Connection, also known as MHC Realty. Our sponsor for today is the Perfect Home Buying Process. We've spent now over 2 decades in developing this process. Obviously, that's aspirational, but we've implemented a lot of tools, techniques, reports, resources to just really help make the process more efficient, less costly, and just to actually have some fun. It should be a point in your life that's exciting, and we'd like to keep the nerves down. So reach out to us in regards to the no obligation consultation. We'd love to have a discussion with you. So with that, I saw you on the side here as your chuckle with the keep the anxiety low. But
Yeah, that'd be nice.
yeah, I find it's my kind of all overarching, other than serving the client in the best manner that I can, but to make it an experience that they look fondly on, as opposed to, okay, we got into the house and it's done, but man, was that ever nerve wracking. You know,
hmm
uh, how do you make home buying fun? You know, but
Yeah. It's a difficult process. That's the tough thing, right? It's We say this all the time. It's the biggest purchase that the majority of the public will ever make. Um, and the guidelines just seem to get stricter and stricter, making it more and more difficult to provide that experience that people enjoy, right? So we definitely have to think outside the box and be really good at what we do.
yeah. Yeah, I think the complexity and then the affordability piece.
hmm
We as realtors and lenders, on my side, I've got to now become creative in how I help you negotiate with your seller to help out with different things here and there. You've got different programs that you need to be aware of. I'm sure as you gave me the outline, we'll talk about non-QM stuff and different loan product that specifically self-employed borrowers can lean into. So anyway, yes, there's a lot there, but if our focus is right and our attitude is good, I think it'll be a great process. So let's get into
Yep.
some of those details. I know you sent me the outline here. What's your thoughts on kind of the visual of the big picture as you just, as you outlined it here?
The big picture, it, big picture is that you know self-employed borrowers are harder, right? They're like, that's the perception, right? Like if you're self-employed, there's a lot of people that just don't even start the process. Um, and I like to approach it as they're not harder. They're just, it's just looked at differently. It's documented differently. The things that we need are different. And so, to your point, the first statement that you made, the sooner you get involved, the better. Um, because and this is with all borrowers, right? Oftentimes, the things that you do that you think you're helping yourself get ready to buy can actually hurt you,
Right.
right? But it goes doubly for our self-employed clients, and so getting in touch sooner rather than later. Try not to let the home buying purchase be a snap decision. Get prepared so that you don't have to go into that non-QM world. So we can help you avoid that.
Yeah, we can get into non-QM and the expenses and
Mhm.
the complexity and everything associated to that. But I guess, the takeaway in my mind is most people want to go down the path of least resistance, right? If you're talking with an agent, you're talking with a lender, um, some people can shy away from complexity and nuance or things that they don't have experience in. It's easier, and you can correct me if I'm wrong on the lending side, but it's easier to take an employed buyer and help them progress through the loan process. So what do a lot of lenders do? There's a lot more of those types of buyers, and they get comfortable with it, and that's what they want to do because it's known and it's simpler.
Yeah.
So my point is, don't get frustrated if you're running across realtors or lenders that seem to not being fully leaned into what it is that you're trying to do. That might be what you're experiencing, is they either don't know or it's more complex than they would prefer to go down. But uh, certainly that's not the case in our end. I mean, again, we have affinity towards self-employed, so we're excited to help those folks. Anyway, I'm kind of
Yeah.
rambling, but
Yeah. No, absolutely. And that's the thing is, having the right relationships, being with the right people, is going to make all the difference in the world in and it does in the lending industry in general. Aside from those few, cookie cutter borrowers out there, you know, being with someone that with a team that's educated right on the process is super important. But yeah, so going into to why of it seeming more complicated for our self-employed borrowers is, you know basically your income is derived from tax returns. Okay. And you talk to any self-employed, person, what their tax returns say is not what they make in income, or what, the cash they have available, or what they take home, or however you want to look at it. Um, they write things off, right? They write things off, and that's one of the perks of being self-employed, is having write-offs that pay stubbed, W-2 employees don't have. And so, but somewhere along the lines, it feels like, and I don't know this to be true. I look at it like this: it feels like the IRS and Fannie Mae kind of got in cahoots, and if you don't show a certain amount, if you don't show the income through your tax returns and pay taxes on it, then you don't get accounted towards income on a mortgage.
mm,
And that's the crux of it, right? And
yeah,
it's my own personal belief. I don't have any, and this is from me, growing up with parents being self-employed and all that, and the struggles that they faced. That's just my belief. I think somewhere along the lines, that's really what it's about, is the IRS getting their tax money.
yeah, and you don't avoid two things, right? Death and taxes. So how do they get their taxes? And
Yeah.
then if you're not a self-employed individual and having been gone through the process of trying to buy a home and the difficulty associated to it, their perception is, hey, we've got to get our taxes.
Yep.
So that, yes, we won't belabor this too much, but really that's where the complexity lies, is how do you, as a self-employed borrower, document what you make, not at the expense of being overtaxed, yet capable of
Correct.
borrowing
Buying.
the monies that are needed for the home that you want. Is
Yeah.
that
Yeah,
a
and
good
that's really
summary?
what it is, and it can get very complicated with multiple entities and pass through companies, S corp, C corp, like all of that, right? What it comes down to is that myself in the lending industry has a different job than your accountant does,
Hmm.
right? And if you want to buy, we have to come together on some kind of a mutual ground in order to show enough income, um, on the right boxes, the right lines on your taxes, so that I can actually count it towards your purchase.
Yeah, and I think that's the important takeaway of why it's much needed to get with the sooner than later, so that you can get with their CPA and have those conversations. Because if you just let your CPA go off in a direction, they're going to lean really heavily in trying to minimize your tax liability. That's one of the
Right.
reasons you
That,
pay a good CPA is
right. That's part
that.
of their job.
Yeah, yeah. So if they're not taking into account that, hey, I want to buy, now in 2 years, I mean, you got to have history. You can't just out of the blue say, hey, I want to, go do what my CPA's been told to do and is focused on doing. And then immediately, hey, I want to do something different and show, income differently.
Yeah.
Anyway, I hate to beat that dead horse too much, but really it's just hyper important to have those conversations way, sooner than later, because you're either you're going to have to wait longer or the cost of money could be greater.
Yeah, and they make it, to your point, they make it more difficult each and every year, right? A couple years back, they passed a new law about amending taxes. You used to be able to amend them, you know, and file them, and now, and to quickly affect the income that those returns show, you can't do that anymore, right? Like it's not that simple anymore. And so
Yeah.
they're constantly changing those guidelines and seemingly making it more difficult.
Yeah. Yeah. So, lenders, as a self-employed buyer, what are the highlights of what lenders focus on that a CPA might not?
Yeah, it really depends on your entity, right?
Okay.
Like if it's Schedule C, like it's simple. It's line 31 on your Schedule C. That shows your income. There's a few things that you can add back in. Most of the time, that is a zero, like or close to it. If you're, if you're an S corp, right, you're going to look at your K1s, and the K, like one of the things that I see all the time is shows a lot of business income, right, but it doesn't get distributed. And so if
Right.
you have a business and the taxes look like you left the money in the business, you didn't take it out, so you don't have to pay income taxes on it. Well, then we don't get accounted, right? And so looking at those things and knowing how to set that up so that you're distributing at least enough, to qualify, um, makes all the difference in the world. And so, to start off, what we're going to look at is 2 years tax returns, all of your business entities, and all of your personal, and those are your federal returns, not the state.
So here, an example popped into my mind, and hopefully this is a good example. But if you're a business, and as a business owner, you're in reinvestment mode, meaning I'm taking the majority of what I make and buying, assets and incurring cost. That all gets written off because I'm reinvesting back into the business. So if you
Yeah,
do that for a year or two, where you're just dumping everything back in so you can grow, and that's going to be counteractive to your desires to buy a home. So you kind of
can
have
be.
could be right,
Yeah,
and that's what we would want to know is, do you want to grow your business and write everything off and go down that path for a while, or are you at some point sooner than later, are you looking to buy a home? Well, you may not be able to or want to write all that off, because you're going to need to personally show income that shows that you can qualify for the purchase of the home.
yeah. Ultimately, you're going to have a couple years of paying more taxes. Like that's real. That's realistically
Yeah,
what it comes down to.
yeah.
Now, depending on the business, right? Like when you're talking reinvestment, depending on the types of assets that you're purchasing or whatever, depreciation is one of the things that we can add back in, right? So if you're buying a depreciating asset, you get a percentage of that you can add back in to your income. Like and that's again knowing um knowing what to look for and what to do, but there's mileage you can add back in, um, depreciation you can add back in. Like there's a few areas where you can still get that write off, tax wise, and the benefit of counting it as income, right, towards
Gotcha.
mortgage.
But you're
So
going to
there's a
want to
few
know that
areas.
up front
Yep.
as best you
Yep.
can so you can document it and treat it accordingly.
Yeah, and it's few businesses that actually purchase enough of those assets. You know what I mean? To
Yeah.
actually to count enough income, right? If you're not taking distributions.
Yeah. The takeaway is similar to a personal, like an employed borrower, that your personal situation is unique to you.
Hmm.
And we can make it work. It's just we have to understand what your personal situation is and make good recommendations as to whether you should buy. And usually it's not if, but when. And
Yep.
then how to buy and how to best buy, right? How do you proceed forward with, specifically as a self-employed, documenting or tracking your expenses and how your CPA
Hmm.
files your taxes and all that. I think the biggest difficulty is once you've filed a tax return as a self-employed borrower, it depending on which path you're going to go down, it could really protract your time to buy. Whereas
Yeah.
as a regular employee,
Right. Yeah. If we need 2 years returns, right? If you've been in business for at least 5 years, then sometimes we can get away with just having one return, depending on the type of the business and what the automated underwriting system tells us. So there are instances where you can get away with 1 year. Majority of the time, you have to have two. Certain types of loans require two, no matter what. And so if you have to go back and now you need 2 years returns to qualify conventionally, right? Like you say, it could really delay your purchase time frame, or it could push you into that non QM realm.
right? Well, let's talk about that. These loan programs for self-employed.
Hmm.
Obviously, non-QM is well, I don't know about obviously, but it's not as known of a loan product as most other
Yeah,
certainly Govy loans. So why don't you go ahead and describe kind of how
yeah,
you analyze what loan program best fits self-employed?
yeah. So it really, again, we go back to the individual situation, and you know um, we always like to try and put our clients in the best financial situation, right? Moving forward, like lowest payment, best interest rate. We all want to do the best for our clients that we can. Typically, that's conventional FHA, VA, the normal, run of the mill everyday loans,
In the
pretty
box
vanilla.
thinking.
Right. Yeah. When we get to self-employed borrowers, oftentimes we get out of that realm because of the items that we've been discussing so far, right? With tax returns and that. So
Right.
non-QM, it's a non-qualified mortgage, not backed by Fannie Mae or Freddie Mac like those other loan types. Doesn't mean that they're bad, but it involves bank statement loans or debt service coverage ratio loans, or gosh, there's a whole bunch of them coming back in um, now. P&L loans. There's many different ways to skin a cat, um, and these loans have their place. They are typically a little bit higher cost loan and a little bit higher interest rate loan. And one of the exercises I like to go through with my self-employed clients is it what's the benefit, what's the payoff, like what's it going to cost you in rate,
Yep.
right? And as of late, I've done a lot more non-QM, and I've not spent the time helping our self-employed borrowers get into the conventional world and to fit into that box, because interest rates have been higher, and the gap between the non-QM interest rates and the conventional interest rates has been much smaller.
Hmm.
So is it worth paying that much more taxes for 2 years, or for whatever that expense is to your
Right.
business?
Right.
So you really have to look at that offset and understand what the cost is, and what your break even is on that cost.
Yeah. Yeah. Again, a lot to analyze on a very personal level for every borrower. So it really needs the time that it deserves to dig into the least cost of money, the less headache, objectives that you want to meet. Again, if you want to reinvest a lot and you want to grow your business, simultaneously purchase a higher cost non-QM loan might be the best fit for you, so you can accomplish.
Right.
Anyway, there's a lot that a lender needs to look at, and not all lenders, you have a economics degree and background. So I would imagine helping, put all that together, not just from a how can I help you get a loan, but what does this mean to
Yeah.
your overall financial picture?
Right. And most self-employed borrowers know that there's an opportunity cost to everything that we do, right?
Yeah.
And so if you're paying all this money to Uncle Sam, right, as opposed to reinvesting in your business, depending on what season of a market that we're in, that could really affect the growth of your business, or the retaining a certain level of income and business that you've been doing. So there's a lot to consider
Yeah.
when you're talking about changing the way that a self-employed person files their tax returns.
Well, and it's a mindset shift for those that have stepped out into the entrepreneurial space, right? You're used to being W-2'd. If you've bought before anything, basically, it's largely leaning on your credit score, your payment history, and all that. So that's kind of how you think, and what you're looking for is the lowest rate, i.e., the lowest cost of money. Versus now you're like, okay, now I'm self-employed and options change, and
Yeah.
things need to be analyzed differently. So don't get fixated on the interest rate. Focus on the overall financial benefit for you personally.
Right. Yeah, it's more than just that you're putting you in the best place financially that we can. It's a holistic look, right? It's like everything. Like, what are your goals? What are you trying to do? And this, not just the self-employed borrowers, but like your everyday borrower too, that wants to put 20% down to get a better rate and not have mortgage insurance. Well, where does that put you and your family financially if something was to happen, right? I
Right.
like We need to understand, no matter what the deal is, we need to understand the consequences, right? There's a benefit and a consequence to everything that we do.
Right. Right. Yeah. But let's look at the whole picture, not just try to stuff everybody, the square peg in the round hole thing. Let's figure out which is the best fit.
Right.
So my
Right.
favorite topic, what's the biggest mistake us realtors make?
Uh,
Be gentle.
um, I, there's been a couple of things, right? I think one of the biggest mistakes is what we see with every borrower, and it's not necessarily the agent's fault. It's the way that our industry has evolved, right? With all the online access to online shopping, we get the cart before the horse way too often,
Agreed.
right? And it's especially detrimental, or stress inducing when it's a self-employed borrower,
Yeah.
right? And so that's probably my biggest red flag, is just people understanding there are steps to everything we do. And if you want it to be a good experience, if you want to get the best bang for your buck and be in the best loan program, like, start with that side first, and don't spend so much time on those online websites looking for and falling in love. Because um gentleman we just saw, Rene Rodriguez, right? He
Hmm.
talks about it
Hmm.
all of the time. Rene helps us understand how our psychology works, right? And we make, even with this big of a decision, it's 99% of the time it's an emotional decision,
Yeah.
right? And so
Yeah.
when you start looking online, you get emotional and you fall in love, and now we're going to buy this house. Well, we don't know if you can qualify. We don't know if it makes sense for you financially. And so that, to me, that's the biggest thing. And then the other thing is, I've, and I've been doing this long enough that I get to work with the partners that I want to. And so I don't see this a lot anymore. But when I first started working, years and years ago, with a lot of self-employed borrowers, it's just like, oh, just assuming you're not going to qualify,
Mm.
right? And moving on to the next, more easy. It's just like lenders, right? Deciding what business they want to do and how much, whether or not they think it's worth their time, right?
Yeah. As an agent, you're also going to have to factor in, yeah, I think it's a crap way to look at it, but some agents are going to look at it as, is this a 2 or 3 month buy, or is this a 6, 12, 18 month buy? And
Right.
because of the trend of people self-employed shifting, or everybody shifting towards find a home online, and then trying to figure out how to structure your finances and your taxes and all that, it inevitably takes longer. It's kind of analogous to new construction. um, if you're, especially if you're doing like a semi-custom custom build, as a real estate agent, you don't get paid anymore, but you're spending a lot of time, right? There's no home out from the ground up is being built in under 6, 8 months.
Yeah.
So that's how much time you're spending with your client. So I'm not saying that all agents look at it like that, but some do. And self-employed could be that category because you don't know. It's like, oh wow, you're a brand new business owner. I know you don't have 2 years because you're brand new, and your
Yeah.
traditional thinking is going to be a factor. What you filed, how you filed, all that's going to be a factor. So just being honest here that an agent and a lender, we get excited about that because that's the right thing to do, and we want to help specifically those folks, but other people are going to make the calculation that I don't have 12,
Yeah.
18 months to help this borrower. And I would say, here's another example that's more kind of emotional than what we just talked about. And that is when I see self employed, this happens all too often. Let's say the husband owns the business and the family gets the idea to buy. And so, guess what the wife and kids are getting excited about? Buying a home.
Yeah.
And if the business owner has no idea how long this is going to take or hasn't structured things correctly, and it is a 12, 18, 24 month buying process, the poor rest of the family is going, I got excited a year and a half ago. And you know what I mean? So
Yeah.
my point is the business owner needs to come to us, get things mapped out, get approved, get qualified for a budget, and then go look for homes so that everybody else can be excited about the process.
Yeah. Yeah. Absolutely. Absolutely. I mean, to follow up what both of those things that you just talked about, the agents should spend the time and get to know, a lender that is very experienced in the self-employed borrowers. And then don't ever assume anything, because there's a loan product for everybody, whether or not it makes sense in their situation. Work with a lender that you trust to tell you the truth, right? Not just push them into a non-QM loan to get a deal done. Um, but yeah, there are options, right? And let us take a look at the whole picture, and to help you make the right decision for you and your family, right?
Yeah.
um
Oh, good.
and then the other thing is that you touched on there is the emotional side, right? Like, that's why getting in early, right? Like, that's how you mitigate that process and make it better for everyone in the entire family, right? Helping
Yeah.
them to understand that it could be some time.
Yeah. And I think you touched on a good point, and that is not all lenders are created equally from the standpoint of access to loan programs or loan product. So
Mhm.
if you get a no, it could be the person that isn't super experienced and doesn't kind of know how to do it and just doesn't want to put you and them in a precarious situation. So they say no. I don't know how they said no, but it might be also, a bank versus a brokerage where a bank has maybe some in-house loan product, plus they can broker some stuff out. So their portfolio of product that they have access to is much larger. And you're like, well, why did the last one or two lenders tell me that I didn't qualify, and now I'm talking to somebody that says I do? It's not necessarily because you were lied to, it's just because they didn't have the loan product that would fit
Right.
your situation.
And I can attest to that. When we first moved to Summit from our last place, like this. So this is something. These are types of loan programs and borrowers that I've worked with my entire career. When I came to Summit, we were in the big boom, and refis, and then COVID and low rates. And why are you wasting your time? Like, my own company, don't waste your time on that hard stuff. Do the cookie cutter stuff. Well, when things shifted, my business wasn't affected, because that's the type of loans that I always did. They're more prevalent now. You see more people doing the bank statements and the DSCRs and all of that stuff. Um, but they still don't have the experience that I do.
Yep.
But my own company made that shift to where, oh man, this little branch here in Meridian was right. And now they went out and bought a non QM lender and brought them in house. right? So now I have all of those products at my fingertips, that I don't have to broker. Not that I don't, because every deal is unique, and so we still broker a lot of them as well. But the opportunities became greater because they finally saw that what we were doing was the right thing, and it's heavily needed in our communities.
Yeah. So the breadth of loan product for self-employed will be dependent on the lender and the product that they have access to. So don't give up right away is my point.
No, no,
Make sure
absolutely.
you're qualifying your lender with, hey, what kind of loan products do you have? Really get your head around what their experience is in executing on specifically your type of business and how you conduct your business, and then that they have a bunch of loan product that they can go farm out to figure out which one is the best fit for you.
Yeah, like it's pretty rare that I can't solve a problem. It's gotten to that point, because we do in-house, non-QM and conventional, and I still broker, and we're correspondents. I have a ton of options, but even with everything that I have, I can't solve all problems. And I
Right.
have, I've built relationships. Like I'm doing one right now that I sent, part of the deal to a client, or to a relationship I have that could do a certain type of loan that I couldn't, right? And we're working together to get, to help the clients. And so it's not just about being able to do the loan myself, but it's understanding, you know, how to solve the problem and
Yeah.
where I can go to solve it to help the client solve the problem.
Yeah. Yeah. Absolutely. All right. Let's dig into some red flags. Kind of. Hey, you might not quite be ready yet because.
Yeah, I mean, number one thing that I'm starting to see because of what's gone on in the economy is declining income, right? So it goes for you and I as well, right? Like you went from COVID where everybody's business as agents and lenders was falling off the trees, right? To now it's quite a bit harder. And if you have an agent that's income's declined over a certain percentage, then that is a red flag to the underwriter. Doesn't mean we can't do it. Could just mean more documentation, or it could mean waiting for your next tax season, right? We until we see the whole picture, we don't know. Um, Commingling counts is typically something that can send you to non-QM. We can do it, right? We can use business funds for personal purchase with non-QM, but that's something that can definitely be a red flag.
Well, that's a
Reason
liability every way you slice it. So that's a no-no.
it can be, definitely can be.
Yeah. Like if you're doing that, please stop.
Yeah, consult your accountant right away.
Well, not only your accountant, but your liability, right? Lawsuits, or I mean, there's a myriad of reasons why you've pierced the corporate veil. So just
Right.
I don't know. I'm kind of a hardliner on that. It just stop. Is anyway.
There's there's a way to there's actually there's safe and legal ways to commingle funds, right? I use business fund. I can use business funds, to offset certain personal debts. Um, but there's certain steps that you have to take to do that. So you need to talk to your accountant. Like if you're self-employed, especially if you're newer at it, get with an accountant that works with a lot of self-employed borrowers or a lot of self-employed people, because they'll have the answers for your question and put you in the right position. Like we think that goes without saying because we've been doing this for so long. But yeah, it's really important to have an educated accountant,
Yeah, yeah,
right?
yeah. They're definitely worth every bit that you're paying them.
Yeah, yeah,
Well, I
absolutely.
mean, depending on anyway,
Yeah.
likely worth everything you're paying them. So you've got declining income, you got commingling accounts. What are some other things that you would really kind of create pause for you?
And as I mentioned earlier today, recently amended tax returns, that's
Hmm.
become made it more difficult. It used to be something that was kind of commonplace, but now it's there's definitely guidelines around that when buying a house, and then you know just making sure that everything through the returns makes sense. Like if you have huge write-offs that don't match tax returns or don't match the income. Um, Pass-throughs, right? I see a lot of pass-throughs. Like there's so much right now. If you get on TikTok or whatever, there's so many like people that are advising people how to set up their businesses and all that stuff that aren't accountants, right? And each state or each business or each entity could have a little bit different different ways to do things. And right, so trust your accountant. Not, if you hear of an idea that you think's good on TikTok, ask your accountant. Just don't just do it.
Right.
Right. And then one of the biggest ones I see is, like I talked about earlier, is lots of ordinary business income on your K1 and no distributions.
Mm.
Okay. If you're not distributing to yourself, and you don't have a lot of cash flow in the business, it's going to be tough to qualify you. So,
Yeah, you are the person, the individual that's buying the house, not your
yep.
business. So if you're not, as a individual, making any income, the distributions aren't coming to you personally. You've got no income to show the lenders that you make enough to buy the property.
Yeah, yeah. To your point, a conventional, like in the box, conventional FHA, US, like you cannot close those loans in an LLC. They will not do primary residence to a business. That's part of the guideline, right?
Yeah.
There are loans where you can close in an LLC, like business purpose, and that's the non-QM, a little bit higher interest rate, a little bit more expensive loans, right? So again, there's ways to do everything, but if you want the best of everything, right, you have to follow their guidelines.
Yeah. Yeah. We put in our outline here what realtors should do. Is it as simple as get with you ASAP, or is it
That's the number one thing. Like,
okay?
and we talk about like this, and that goes. I would hope at this point it goes without saying, because we say it nonstop, right? In every situation, that is the thing to do.
Well, I've been concerned about over repeating ourselves, but not
Yeah, I
everybody
know.
watches every episode. Not everybody makes it through every episode. So I think, and it's so important that, if you're watching us enough to be annoyed by saying get with us sooner than later, good, because
It's the
we
right thing to do.
yeah, it's just okay. So realtors. Help
And then
their buyers get with a lender that can do all the things that I mentioned earlier.
yes, early on, very
Yeah.
early on, and it's not always up to the realtors, right? Like that, like I said, the world that we live in now, the way that we do the real estate business is done, it's harder, right?
Yeah.
Um, but yeah, the earlier the better is the number one thing. Like
Gotcha.
let us figure out. Let's not have to rush into um any just run of the mill product that we can get done for these folks. Like let's try to do the best that we can for them.
Yeah. So that's our number one tip, I would say. I can't think of anything ahead of that, but what are some other
Mhm.
tips that you would say?
Just understanding enough, right? Like, so I don't want to do your job. I don't want to know how to do every part of your job. You're the expert. I want to leave that up to you, right? But I want to understand enough of it that I know how it's going to affect our transaction and our clients, right? And when to no, you need to talk to Jerod about this. You need to, and this is kind of the way that it will go. So it's from the realtor side, it's the same thing. You don't need to know how to be a lender. You don't want to advise on loan products or any of that stuff, but understand enough to know that there are alternative products out there, that there's almost a loan for every situation. Like, that's one thing that's funny about the lending industry. As the economy changes and the environment changes, loan products tend to come up to help folks solve their problems.
Yeah, it
Right?
might be a little delay, like, hey, I have a hyper unique situation. There's nothing there. Okay, well, wait a while because likelihood is other borrowers that are
Yes.
in your situation and somebody's going to come up with the solution. Right?
Yep.
The solution might cost a little more, i.e., a higher interest rate or what have you, or they might put you through the ringer a little bit more, but they kind of have to, right? Because it's a
Yeah.
risk versus reward thing, right? If you got you got the govy loans, conventionals, things that are insured and backed, that's not much risk. They can, drop the interest rates and the costs, but now you're doing stuff a little outside the box. Fewer people are doing it. There's more liability of them getting
Yeah.
potential of them getting the home back, then they're going to charge you more money for that.
Yeah. Yeah.
So
After '08, it's not just, tell me what you make and you qualify anymore, right? Like, even with this non-QM stuff, there's guidelines that have to be met, right? You have to have skin in the game and you have to jump through some hoops, which is what we want. We don't want to get back to where we were, right? Prior to '08. So
yeah,
even though it's a pain for the borrowers, we're in a better place. And the non-QM products that we have now are much, much safer and less predatory towards the consumer, because of the guidelines that they put in place.
Well, that's a good point. The pendulum swing that we have, right? You mentioned pre 08, 09, but you and I were in the industry then, and you know, I don't even think it was how much do you make, is can you fog this mirror? So
It was
it was
open loan
bad.
fraud is what it was. It
Yeah,
literally was open loan fraud. You can state your income. It was actually fraud if you stated an amount that you didn't make, but you know what I mean? There was really no oversight towards it.
yeah. So I guess, the pendulum was way over here, and it caused the repercussions that it did, and we've paid the consequences. Now it kind of swung pretty heavy, and loan programs, lenders kind of collapse, down, revisit kind of the mistakes that they made, lick their wounds, come back at it again. Uh, where would you say we're kind of at in that healthy pendulum
Well, yeah,
swing?
I feel like we're back towards the middle, right? It did swing really hard the other direction, to where you couldn't get anything done, and now we've kind of moved in that area to where we can solve most of the problems that are out there.
Yeah. Yeah.
But
So
it
I
feels
guess,
it feels much safer, right? More down payment, more accountability on the lender side, more documentation on the borrower side. Like it feels safer than it was for sure.
yeah. Yes. Safer, healthier, and reasonable. So again, unless you're doing some really out there stuff that would be hard to chase, there's something
Right.
there that can help you. It might be a little more costly, but it might be more costly uh, and logical for you for a time because of other extenuating, you know, uh, circumstances or situations that make sense for you right now.
Yeah, and just like any other real estate transaction, what's your cost of waiting?
Right.
Right? Like, I mean, you have to weigh all of those factors, right? If it solves your problem now and gets you and your family in a home now, without liquidating business assets, or paying more taxes, and you're buying before the next great appreciation, season, then is it the right thing for you, right? So there's
Yeah.
there's a lot of things to weigh.
Yeah. Can I wait for a year, go into more of a, in the box loan, save myself a percent, a point of interest, less money, but now the home values have gone up 5%. You,
Hmm.
that's the calculus.
Right. And so if you as realtors know that there's problem or that there's programs out there to solve these problems, just knowing that most of the time is enough, and then building a relationship with a lender that is very educated, and experienced in those products, then the thing that you won't do is assume that they can't qualify,
Yeah.
right? You'll know right off the bat that, hey, let's get you in touch and let's see what we can do, so you don't have to disqualify them right off the bat and move on to the next lead, because every family needs to be helped.
Yeah, yeah, absolutely. Well, you had sent over, I collapsed it down to just the primary point, real world examples, and we kind of talked before the episode that we've got a lot of ground to cover. We're 43 minutes in. What's your thoughts on giving some of those examples, or do you feel like we kind of touched on some of those over the course of the episode?
I think we touched on a lot of them. Yeah, I mean, you could go get into the specifics of the different types of loan products. I think it gets heavy for listeners, right? And because it might not fit their situation. Um, yeah, so I think we've covered most of it. I know that, if there's something, it would be the tip. If you're that self-employed borrower, the people that we want to talk to, it would be, giving them a couple tips. Again, first one is to get in touch with us early. Um, Make sure that you have the accountant, right? Going back over some of the things that we've talked about, the accountant that's experienced with self-employed borrowers. And then when you get in touch with us early, you can get your lender in touch with your accountant early, right?
Yeah,
Your lender is not an accountant. At least I don't know any that are, and I don't want to be. But I know what I have to look at, what I'm required to look at, and I can at least educate your accountant on that. So if it is waiting to file new returns, your accountant then knows what to look for, and how to help us get the deal done.
yeah. Absolutely.
right?
Well, just to kind of button things up, land the plane here, you had sent over, placed in the outline a final message. I know you sent me a quote, which I didn't incorporate into the overlays here. Is that a quote you want me to maybe read out, or is that something you have memorized, or?
It's not, and it's it's basically, it's like what we talked about, right? I qualify self-employed borrowers all the time. All they need is a lender who knows what they're doing, how to read the story, right, and how to present the story to the underwriter, and make sure that it fits the guidelines. And that's really where I've specialized. This
Yeah,
it's something that I've specialized in for better than a decade. And
yeah,
so and it's a something that's close to my heart because of my family history.
yeah.
So
I love it. That's a perfect way to wrap up the episode. Reach out to a lender, hopefully Chase, because his heart's in the right place, his experience is there, and we'll get you taken care of. Remember, it's not if you're going to be able to buy; it's usually when, and does it make sense? And we're going to give you the straight answer to what our recommendations were going to be, how we would treat ourselves, how we would treat our family. So you'll get the true um, recommendation from us for sure. But anyway, well, thanks so much, Chase. We covered a lot, and hopefully this has been super helpful to the listeners. And we'll recommend them to reach out to you directly and see how you can help them.
sounds good. I appreciate the time as always, Jared. Great
Yeah,
conversation, my friend.
absolutely. All right, everybody. Otherwise, we'll wish you a blessed one. Take care.